Greetings everyone, JJ here from SchoolOfTrade.com, March 9th, 2010. Here's your live trading recap. What a great day we had today in the room, guys. Before we talk about the trades we took today, and we took about 3 trades today, but we spent a lot of time with the wave indicator. We'll talk about that as well. 3 important links, guys. The first link is for our 12-month track record. Second link is for our 3-week trial. Third link is for our blog. Now, on our blog right now, we have lots of great, of course, video series. We just finished up the Discipline Cycle Workshop. We finished up our trade management series. We have 2 articles, one on speed trading, one on dollar index trading. Lots of important stuff, guys, on the blog. So use that link there in the description. Head over to the blog and use those videos. All right, guys, 3 trades today. Pretty slow, choppy market. Now, this doesn't show the success we've had, though, because a lot of success we had today was on the wave indicator. Now, we didn't take any trades on the wave indicator today, but we spent a lot of time today because this slow, choppy market was here learning about it. And of course, I want to give a big thank you to all of our members for sharing all their experiences with it and helping a lot of our new guests in the room today really begin to understand what the wave indicator is all about and just how powerful it is. We looked at a very slow market this morning, and well, we'll show you guys more of it here as we move through the video. 3 trades, as you can see, we got a small scratch trade there at the end of the morning. We took a large winner there at the beginning, and price action kind of got worse and worse as the morning went on. We're now over $23,000 for the month for the year so far, guys. Over $3,000 for the month of March. And of course, guys, we're always shooting for that $10,000 a month mark, and only 4 contracts to get there. We'll keep you guys posted on the way through the rest of the month here. Now, what's the most important thing that happened today? Well, as always, we open up our chart at 7:45. We begin to diagnose what the market is trying to tell us right now. And we always look for clues. Now, guys, if you were with us this morning, right, we kept track of all these clues in real time as we found them. Okay, and let's go over some of the things that we saw at 8 o'clock this morning. Now, we saw, of course, at 8:20 this morning, we saw gold moving down, but very sideways, right? We saw this very sideways, sluggish move on gold. And we noticed right away that on gold this morning, we had an area, and if you open up your charts, you'll see what I mean, ranging from 1115 down to 1100. And now when we're looking at our setting up for the day ahead, we look for things like double tops and double bottoms to give us kind of an idea for where price might get a little bit choppy. And those double tops and double bottoms, that's exactly where these were located. 1100 to 1115, we saw multiple double tops and double bottoms inside of that 15-point range. So we knew right away, whether it be from, of course, last week's price action or last hour's price action, we knew right away between 1100 and 1115, we really need to be careful. We also saw at the same time on crude oil, we saw the same type of situation around the 80 even level. Now again, if you have your charts open right now, look at the 80 even level on crude and you'll see exactly why we saw that as being a very concerning location as well. Now, we of course locate these things every morning just like we always do. But there was a difference this morning. And the difference was that these locations, these areas of price, that's exactly where we were trading. So we opened up our chart this morning. We identified a very kind of iffy area there on gold. Same thing on crude. And the problem was we were trading right there, right? We were trading at 1110, 1115 on gold. We were trading at 80 even on crude. All right. And then at 8:45, half an hour, 45 minutes later, we saw our first pattern set up on crude. We saw a 2-step pattern to the long side, right? Price was dropping. We looked for a reversal back to the long side. We looked at a 2-step pattern at 8:45, and we saw no speed. Short-term market, of course, was to the short side. And at the end of the day, or should I say after that move ended up working out, we looked back at the move, and what did we see? We saw very typical of a low-volume environment. Okay, so what happened is the pace of the tape slowed down so much around the 2-step, then it increased after, right, it triggered. Now we see that all the time, don't we, guys? Right, in a low volume environment, what usually happens? We usually see the pattern set up first, and then the rules, right, then the rules qualify afterwards. Of course, we need the rules to qualify beforehand, right? So that's usually what happens in a low volume environment. So we saw that happening again this morning as well. So between the issues of gold and crude being in the wrong place in the chart and seeing the first couple patterns of the morning, we saw very little speed, very little follow through, and the rules lined up after the pattern had already triggered. So we knew things were going to be slow this morning. Now we also looked, of course, at the dollar index. And the dollar index always gives us a lot of great correlations, always gives us a lot of great feedback as far as what we should be concerned about or what we should be looking forward to in the market. Here's an example of the dollar index here. Now you'll see the dollar on the left, and then of course the crude oil on the right. Well, let's take a look at this real quick. Dollar on the left, crude oil on the right. Notice for a second on the left side, we have the previous low of day here in the dollar. So the dollar is sitting on support. Now what happened was when the dollar is sitting on support, follow me over here to the right side now on the crude, we know to stay away from a breaker pattern long, right? Support on the dollar, overhead resistance on the crude, right? It's a negative correlation. Now, but here's the problem we saw. And again, this goes back to the initial notes we took in the beginning of the morning. What do we see? We saw the patterns setting up, but like a lot of low volume days, we didn't see the actual confirmation trigger to get us into the trade. And the confirmation trigger is momentum confirming, big money in the market, right? Obviously, good speed of the tape. Okay, so those confirmations we look for, they didn't show up. So here's what ended up happening. We have support on the dollar. That means I've got to be very careful to the buy side of crude. Okay, that's pretty easy, right? So we're looking for the short here, right? We're looking for a two-step short. With the dollar support, that means overhead resistance on crude. The problem is because it was a low volume day though, we were still looking for conviction to the downside, and we didn't see any big money on the sell side. So while we watched as price broke below the 80.30s here, looking for that two-step short, right below this 81.35 level there, we noticed right away we were not seeing the big money in the market. So once again, support on the dollar means we've got to be careful taking longs on the crude. Now that's fine because I can still take the short side, unless of course this is what showed up today. Low volume environment, we didn't see a lot of the big money selling here. So without the conviction to the downside and no big money in the downside, we had to keep waiting. So we kept waiting. But this is a lot of what happened today, guys. With the dollar sitting on support, we didn't have much of room to the upside. Then, of course, without very much volume in the market, we had to worry about lack of conviction to the downside. Okay, so great example of what happened today, which kind of kept us sitting on our hands for most of the morning. Let's take a look at the three trades we took today, though. The first trade here was on the gold. The first two trades on gold. Now, you'll notice we have the short-term trend is up on the left side of your screen here at 940. Now, we had just gotten out of the 930 open. Short-term trend is up. As you can see, the slope of my trigger line, nice and steep here. We then break above this red line, that red line at 11.15 even. We mark up our swing high, and we break above that swing high. Very easy pattern. At 940, breaker pattern long, 15.6 was the fill. We got our +4, move our stop up to entry +1, and that got kind of a lucky bounce there at +2 for 12 ticks or 120 USD. So we put 120 USD at 940 in our pocket. Now we didn't know this at the time, but boy, we're very thankful we were paying attention here and not wasting time, because you can see, guys, the market really slowed down towards the end of the morning. We only got a couple trade opportunities here early in the morning. So the first trade at 940, and now I want you guys to see real quick, look at the bracket here. Right, look at this bracket. Now the bracket is going to be from this 17.5, right, down to my 15 even, right? There's my bracket. Okay, that's pretty easy to see, right? There's my bracket. So what I'm looking for here is a breaker pattern long. We just took that one, going into the bracket. Now as we try, of course, right, to break out of the bracket, as you can see, we break above the 17 even. We try to find new highs up top here, but there's no new highs to be made. So it looks like we may be going right back down into the bracket. We mark up our swing low. We take the break of that swing low back down to the bracket, of course, at 10.12 here. This is a two-step pattern short, counter trend trade. 16.8 is the fill. +4 +1 is 10 ticks. So first target of +4 is filled. Stop to entry +1. We get taken out of the stop +1. That's 10 ticks or 100 USD. So the first two trades here, guys, back-to-back winners, 940 and then 10.12. But what I really want you guys to see there is how we, of course, took the trade going into the bracket, and then also took the follow-up trade at 10.12, reversing off the high of the bracket, going back into this sideways range. It's a counter trend two-step pattern. Very effective in sideways choppy markets like we saw today.